PPC Limited was founded in 1892. Wow, this is going back some time.
This is Solly Marks. Was that his first name? The guy who had the cement concession from Paul Kruger and set up the first cement works just to the north of Pretoria. That's what PPC stands for, is Pretoria Portland Cement.
But who was the long-term CEO here?
Well, they had quite a few. Remember, Ketso Gordon was the CEO,
Before
but he was
Ketso?
before Ketso.
I
Paul
remember interviewing him all the
but
time.
before
No,
Paul
before.
Staver.
There was another chap,
I'm
an
pushing you
ex-Barlows
guys.
man that was in there as well. I'm trying to remember his name.
We'll think of
all
him in a
right.
minute.
Yes, we all think you're about
Tony
the same
Phillips.
person.
No?
No, I don't know what's wrong with me. I can't
It'll come before we get to the end of this
It will.
conversation. I'm
Anyway,
sure.
market
Yes.
cap, 4.7 billion rand, PE ratio of 5.7, dividend yield here of 4.3%. Big concern over PPC given the downgrade from
Yeah.
a rating agency perspective. And in fact, I've heard that management is saying that this could have pushed the company over the edge.
Yeah, no, you're right. If I go back a decade or so to the time when this was regarded as being what's called a widow's and orphan stock, not going to shoot the lights out, but at the same time it was going to be paying good dividends on a pretty much a sustained basis. And it always attracted a very, very good and loyal following at the presentations. And just look what's happened to it now.
Well,
I mean,
let's look at that right now.
it's
And
appalling.
the share price graph will definitely
It really
give
is.
a good
It's fallen out
reflection.
of bed. I think a lot of this goes back to, and you can see it in the share price graph. I mean, Ketso Gordon, I believe, was doing a fantastic job, and I think he realised the problems that it was facing, both internally and from outside in terms of the new competition that was coming on stream, and was acting accordingly. And he made a very principled stand, and unfortunately, the board reacted the wrong way and accepted his resignation, and the rest is history. And I think they really lost a fantastic guy in
At
Ketso.
£7.50, I've got to ask you, is this the ultimate value stock? I mean, if you think that this share price is going to recover, the company is going to recover, then surely it's one of those that you need to pick up at current levels.
Look, it's interesting because the best time to have bought them was in 2003, and then there was this big rally and they got to 50 rands a share. This is the 5-year chart showing the highs at 30. But look, back in the day when it was still part of the Barlows group, then it got unbundled and it all looked good. That was in about 2005. They were basically the market leader in a commodity everybody wanted to be in. It was really looking tremendous. High dividend yield. People accused them of having a lazy balance sheet. In other words, not being sufficiently levered. Now, 10 years later, after having gone quite aggressively into Africa and built new facilities in the DRC and Congo, and they're up in Ethiopia and other places, the debt levels are now a problem, and then they fell foul of one of those covenants, got a downgrade, and now they're scrambling to do a rights issue at this very depressed price, because that's what's coming.
But I mean, the question is PPC going to survive? Because if you believe that it's going to survive, ultimately you are talking about a recovery.
Well,
in
we
the stock
actually don't
price.
know, and that's a serious statement. We don't know. The jury's out on this one. Paul has mentioned the expansion into the rest of Africa. Well, as we all know Africa growth has been declining very, very rapidly in the past year or two, and it's likely to remain at or below 3% for sub-Saharan Africa for quite some time. So it's not the fantastic growth story that we thought it was even a year or two ago. So you've geared up, you've leveraged up, you're into a lot of these countries, many of which are probably going to be pulling back on many of their infrastructural developments.
And there's quite a lot of competition in the local market.
Yeah.
We know that
Sepaku.
got a new plant up in Lichtenburg. Lafarge was busy and got all of its new activities up. So that position where they traditionally dominated Gauteng and the Western Cape is a little bit at risk now, because some of their core long-term customers like Cashbuild are negotiating better deals with some of their competitors.
Well, let's call
Difficult.
this one. It's a difficult time for the company. Are you going hot or not, Chris?
Deep freeze.
We're clearly not hot.
Deep freeze.
Are
Look,
you hot or not?
I think that they haven't finalized the rights issue. And you know what happens in these cases is they're trying to pitch the rights issue at a level which is not too expensive for them to get an underwriter, but which is also so attractive to the existing shareholders that you kind of have to follow your rights. Otherwise you get diluted to hell and beyond. So I think it's going to probably bounce down before it bounces up.
So you are?
I would say not hot now. But I think it will survive, to answer your earlier question, because it's too big and too established in a big industry that ultimately sort of rumbles forward. So I think it survives. So
Chris
maybe
wants to add something
And the
there.
former CEO's name was John Gomersall.
There we go.
There you go.
Well done. We knew that somebody would come to the fore, and it was Chris,
Yeah, good
otherwise
job.
known as Skoko.